price of Dogecoin is indicating that a massive move is on the way, and on-chain metrics also point to a similar conclusion. On closer inspection, this move appears to favor the bulls. Thanks for watching Crypto Lion. If you haven't already, consider hitting that subscribe button and turning on post notifications. We also have a crypto Discord group where we give out calls for our favorite altcoins, and you can also win special rewards for inviting your friends to the group. Links for that are in the description. The price of Dogecoin has fallen roughly 83% from its all-time high and is now hovering around 11 cents. Doge has established 3 distinct lower highs and lower lows since September 29th of last year. Using trend lines to connect these points reveals the formation of a falling wedge pattern. This technical formation predicts a 34% upswing by adding the distance between the first swing high and swing low to the breakout point. If the breakout occurs around 13.3 cents, the target is 17.8 cents. However, investors should take note of the recent breakdown of the maximum pain point at 12.4 cents. A recovery above this level would instill confidence among hesitant buyers, and this development could serve as a catalyst for a bullish market rally. This bullish theory is supported by the 1-hour active addresses index. In less than 12 hours, the number of active addresses increased from 4,831 to 101,300. This sudden increase in the number of investors interacting with the Dogecoin blockchain suggests that these investors are interested in Doge at its current price. As a result, the bullish thesis benefits from the recent surge in market participants that are willing to buy Doge. In addition, the whale transaction count, which tracks the number of transfers worth $100,000 or more, increased dramatically from 28 to 685. This metric is a proxy for investment interest from high net worth individuals and whales. As a result, the 2,346% increase suggests that whales are also interested in investing in Dogecoin. Market participants should also keep in mind that during uptrends, a large increase in the number of whale transactions coincides with local tops and can be used to identify trend changes. Overall, the price of Dogecoin appears to be poised for a rise. However, it must break through the 12.4 cents resistance level. Failure to do so may result in a massive correction, with Doge falling to 8.5 cents in the process. If the bears don't relent, the dog-themed cryptocurrency could retest the 6.3 cent support level, indicating a 46% drop from its current position. But we'd like to take a minute to let you know about a tested and trusted investment platform that can get you a lot of returns. Usana Health is a company that was created out of necessity as a result of the frustration of its founder with the state of conventional medicine. The founder, Daniel Carcillo, was in search of non-traditional medicine that could help with his post-concussion syndrome when he discovered mushrooms that contain psilocybin in addition to evidence-based therapies and other plant medicines, including fungi and adaptogens. He gave it a try, and he was completely cured, and on the strength of this discovery, the company was born. More information about that company and how you can make the most of your investment can be found through the link in the description below. The cryptocurrency market as a whole is still in the grip of a deep correction that began last year. With war raging in Ukraine and inflation ravaging savers' wallets in the United States, it appears that the people's currency, as Elon Musk famously dubbed it, is the only thing still dropping in a sea of rising consumer prices. But despite its recent decline, Dogecoin is still a massively popular project. Indeed, the coin is among the most popular cryptocurrencies among American investors. While its price may or may not have reached a bottom, many believe 2022 can bring decent gains to investors who are still keeping an eye on that Doge in the window. Finder, a financial comparison website, compiles expert predictions on the future of Dogecoin on a regular basis. The sentiment of those surveyed was recorded weekly in a regularly updated forecast after asking the opinions of over 15 experts on a rotating schedule. Dogecoin is expected to rise by roughly 16.5% this year, settling around 16 cents by the end of the year, according to the panel. Looking ahead, Finder's experts predict that Dogecoin will steadily rise over the next 8 years, reaching a high of 54 cents by 2030. Last week on Wednesday, President Biden signed an executive order directing the federal government to develop a plan to regulate cryptocurrencies, recognizing their popularity and potential to destabilize traditional finance. The order, which has been in the works for months, will help financial regulators better understand the risks and opportunities presented by digital assets, particularly in the areas of consumer protection, national security, and illicit finance. According to the Biden administration, the move is in response to explosive growth in digital assets, an increasing number of countries investigating central bank digital currencies, and a desire to maintain American technological leadership. It instructs financial regulators to continue work that began in earnest last year, such as researching and reporting on the creation of a digital dollar. The findings could help shape the contours of a rapidly innovating industry that has quickly moved into the mainstream, but that critics say allows for illicit activity, including money laundering, and creates enormous financial risks for consumers and the financial system. The president's National Security Advisor, Jake Sullivan, and National Economic Council Director Brian Deese said in a statement that the order will help position the United States to continue playing a leading role in the innovation and governance of the digital assets ecosystem at home and abroad, in a way that protects consumers, is consistent with our democratic values, and advances U.S. global competitiveness. This directive directs the government to evaluate the feasibility of creating a central bank digital currency, essentially a digital dollar, to be used to modernize payment systems. Central banks from the Bahamas to Sweden to China are experimenting with digital currency offerings, raising fears among lawmakers that the feds will fall behind the competition. The Federal Reserve released a long-awaited report on central bank digital currencies in January, claiming that it was intended to spark debate. Following the announcement of the executive order on Wednesday, the Fed's official Twitter account stated that it had made no decisions on whether to pursue or implement a central bank digital currency, and invited the public to continue commenting on the issues raised in its report. Some, including Fed Chair Jerome H. Powell, have argued that a digital dollar issued by the United States would eliminate the need for privately issued stablecoins, digital currencies that promise to maintain their value by relying on stable financial backing such as bank reserves and short-term debt. Private issuers disagree, arguing that they can coexist with a central digital currency if one is developed. Officials from the administration who detailed the digital currency portion of the order for reporters on Wednesday said the Fed's earlier report laid a solid foundation but didn't address some of the more difficult issues surrounding the digital dollar, such as its design and issuance. Treasury Department officials will now conduct a much more thorough examination of the digital dollar concept and the issues that may arise as a result of it. The order, according to Eswar Prasad, a professor of trade policy at Cornell University and author of The Future of Money, will put the U.S. in pole position to set global standards and move closer to what he calls the inevitable digitization of the world's preeminent currency. Cryptocurrency experts have long advocated for the government to streamline what had previously been a patchwork regulatory approach. "We need definitive answers on how to proceed," said Louis Lahat, a cryptocurrency expert at the law firm Foley & Lardner. "We're working in a gray area and a sandbox. We've seen a complete lack of strategic direction or thought from the federal government for years," he added. The executive order comes at a time of increased national security concerns, including whether Russia will use cryptocurrency to avoid punishing sanctions imposed by the U.S. on President Vladimir Putin's regime in response to his invasion of Ukraine. A senior Biden administration official who detailed the executive order's contents but wasn't authorized to speak publicly about it told reporters that work on it predated the Ukraine war. According to the official, cryptocurrency would not be a viable way for Russia to avoid sanctions, but the geopolitical situation exacerbates long-standing concerns about the role of anonymity in cryptocurrency and the risk of illicit activity that results. The blockchain technology that underpins cryptocurrencies allows anyone who can read computer code to track transactions, ostensibly eliminating the need for trust between transacting parties and enabling anonymity. That's it for today. Thank you for watching the video. If you enjoyed it, make sure you subscribe if you haven't already, and don't forget to turn on bell notifications. If you have any questions, drop us a comment, and as always, good luck and happy investing.
Hollywood Carson. That's how it goes. Hollywood Carson.